My big concern around artificial intelligence is the notion of hallucinations and information just coming back incorrectly. And I think there's a high probability of that happening within accounting, which is a different take than what a lot of people have. But from my perspective, when you get into the weeds of accounting within any given company, everyone's a little bit different. Every business has its nuances and operates slightly differently. And so because of that, it's very challenging to apply a general large language model or a general piece of AI to automate an accounting department's function.
Hello, ladies and gentlemen, and welcome to our interview with Mike Whitmire. Mike is the CEO of accounting solutions company FloQast, which is the first accounting transformation platform powered by AI agents. Mike, welcome to our Risk Management Show podcast today.
Thanks for having me, Boris. Looking forward to the conversation.
Absolutely. It's my pleasure, Mike. So I believe that we will have a very thoughtful conversation on the topic of a risk associated with AI and its implication for accounting. But before that, Mike, could you tell us a short story about yourself? What brought you to where you are right now and what you guys at FloQast are up to these days?
Yeah, of course. I'll try to keep it brief. I started my career in accounting. I was an auditor at Ernst& Young, so that was my introduction to risk and compliance was really through the accounting lens mostly. I joined in 2007, and so Sarbanes-Oxley implementation was we were right in the throes of getting SOX implemented. So I got to learn about risk, like I said, from that perspective of the accountant and the auditor, and audited a couple public companies, had a good mix of private. Ultimately decided I wanted to move on from audit after about 4 years and moved over to a pre-IPO software company by the name of Cornerstone On Demand. So in the spirit of risk discussion over there, it was all about, we were getting ready to go public. We had to get our risk and control matrix in place so we could start layering in our controls and going from there and kind of operating like a public company. So for better or for worse, I got to be heavily involved in that process of establishing the RCM and trying to get the team to operate in this new mode as a public company, which I'll tell you, just the human aspect of compliance is very challenging, getting people to change their behavior as your company grows, as I'm sure many of the people listening here are aware of. So I got to see that firsthand from inside of a private company moving into that of a public accounting department. Ultimately, I realized that we had a lot of challenges around the month-end close and getting through our audits, and there wasn't really good software for helping manage our close process. So I decided to leave Cornerstone, that job, back in 2012 and start working on FloQast. And so when we founded FloQast, the initial pain point was really around month-end close process, checklist, collaboration, getting your team on the same page, and automating the reconciliation process. The reconciliations are what are getting audited by the auditors every quarter and every year. And so having that process really buttoned up and solidified and accurate is really important for public companies. And so that was the pain point we set out to solve up front. Over the years, our platform has expanded to where we help with really all facets of accounting operations. Month-end close still being key to that, but there is a lot of workflows that occur under the controllership that we want to help manage. And so we broadened out. We're now to a point where we consider ourselves an accounting transformation platform. We have a lot of automation capabilities within our platform. But then when you layer in AI and you start to discuss agents, we're really able to help drive a lot of automation. So that's been really exciting for our clients. But I think a good topic for today is around the risk associated with AI, because it is not without risks. And that's something that's very top of mind for us at FloQast. So yeah, excited to discuss that today.
Absolutely.
And a little overview of FloQast. So we've been around for about 10 years, about 800 employees.
Wow.
Over 3,000 accounts are closing their books on FloQast and using our a chunk of them are using our compliance solution as well. We're international offices in LA, New York, Sydney, London, all the cool cities out there. We have offices in. So I will shut up now. I think that's enough of an intro.
Yeah, fantastic. That's quite a growth for 10 years. You have 800 employees. So, Mike, I know that we all live in this age of AI, and this year we actually have an AI agent. Biggest kind of buzz going on. So, can you explain us what are some of the risks AI introduced in the field of accounting, maybe like financial reporting, compliance, and what are some of the risk businesses face when relying on just generic AI tools? Because I think we all do some AI, EL stuff right now, and probably for accounting people, it's now becoming even easier because you can just say, do for me a formula like my expenses formula of my revenue, and you are already think you can file your accounts. What do you think about it?
So I'll take a step back, and there are different forms and flavors of AI and how it can be used. One of the more common use cases we're seeing is leveraging large language models to interpret and analyze data. So let's say in that example, I'm looking through my expenses and oh, how much money did I pay this vendor? You know, that a large language model could dig through the data and provide you that type of insight, probably pretty accurately. You can be confident with what you're getting back from it. Where I more look at how AI is being leveraged is actually performing the work that produces financial statements. And that's an area where a lot of the waste occurs within an accounting department is grabbing information, manually calculating a journal entry. That process, it's really time consuming, and because it's manual, it presents risks. And because it feeds into a process that produces financial statements, there's no room for error. It has to be right. So if the AI you're using is actually doing accounting work upstream from financial statements, we need to think about it a little differently than AI that's being used to analyze data after the fact. Because AI that's being used to produce results or produce data that feeds into financial statements is going to be audited and cannot fail an audit, or else you're going to have a host of issues that come along with that. So when I think about AI, it's how do we deploy it to help produce financial statements and really drive automation? And then what are the smart ways to use AI such that we can avoid risks that are going to come along with AI? My big concern around artificial intelligence is the notion of hallucinations and information just coming back incorrectly. And I think there's a high probability of that happening within accounting, which is a different take than what a lot of people have. But from my perspective, when you get into the weeds of accounting within any given company, everyone's a little bit different. Every business has its nuances and operates slightly differently. And so because of that, it's very challenging to apply a general large language model or a general piece of AI to automate an accounting department's function. We need to think in a little bit more of a customizable way. And so that's where we've developed this approach of let's use AI to write software code that automates specific work. And by writing software code, namely Python code, we're able to produce technology that can be audited after the fact. And we can double check the work to make sure it's being done properly. Whereas if you take the approach of, I'm going to have a large language model perform work, you're inserting the risk of a hallucination and that work being done improperly, and you as the accountant or you as the auditor having no idea that work was done improperly, right? Because if you think about that world, if you think about adopting more technology, we're moving away from the world of a substantive financial statement audit and more into the world of an IT and a control-based audit. And with that, we have to go in and audit the technology that's being used. Today, we can audit software code by doing a test of one, some IT general controls, and feeling good about how the technology is working. With large language models, they're not repetitive enough to simply do a test of one and feel comfortable with it. And we need to understand how the technology is working. And I just the my line around this is like the people who write this technology, who build the code, don't know how large language models work themselves. There's still some questions around how they actually work behind the scenes. If that's true, how in the world can we expect your average staff auditor from Ernst& Young to figure out how a large language
Exactly.
model works and get comfortable auditing that, particularly in a world where they're upgraded every month, it seems like. The tech's changing every single month, and so we can't expect the audit world to keep up with that pace of innovation. And so it's incumbent upon us to think about the best way to deploy this technology such that we're going to get through audits and it'll be a usable solution in the future.
Mhm. So do you
Sorry,
think
long-winded answer, but yeah, there's a lot to be considered here.
do you think the current regulatory frameworks are equipped with to deal with such a fast pace of AI adoption in accounting? What changes might be needed with the regulatory guys?
No, I don't. We're not equipped today for the technology that's available. I think what's kind of nice is the technology is becoming available ahead of the adoption curve within accounting. And so we'll have some time to catch up from a regulation perspective. Um, but we have here at FloQast, we have multiple Big Four partners. We work with a ton of audit firms and consulting firms. And I've been asking them this question. And what I found is many of the firms are looking to work with this technology immediately. And with that, they don't want to wait for regulation to come about to help like figure out how we're going to do all this stuff. So they're actually taking it on themselves to start to draft up some of the proposed regulation and like, hey, SEC, here's how we think this should be thought of, and really helping the SEC get a jump start on putting some of those guidelines and frameworks in place for getting the audits done. So I think it's going to end up being a combination of private and public helping implement these or develop the guidelines and implement them and deploy them as well. So I think it's going to be a rapidly moving thing, but the whole community seems to be coming together to help develop the rules and how it's going to work.
Mhm. All right. So,
And then change of pace going forward. I don't know, man. Yeah, that'll be
yeah,
fascinating to
change
watch
is
because
always
things,
happening. With
yep.
our age is is just it happens instead of every time every 10 years. It now every quarter it's something new. But can you explain maybe what are some real world examples of AI related failures or risks in accounting systems? Maybe without dropping the names, so we can learn from them.
Well, fortunately, we haven't had any real life failures of AI being used incorrectly yet because again, it hasn't been adopted widely enough to present that risk. And I think what we've seen from speaking with our customers is there's a lot of hesitancy around adopting it because of that fear of it doing things incorrectly. So I think fortunately there hasn't been any major case where you've seen a public company, fail their audit because AI hallucinated and did something incorrectly. But I just think of my own personal usage of some of these solutions. I've used OpenAI, I use Gemini, I use some of the other ones, and you can ask what feels like shockingly simple questions and get answers back that you know are wrong. As a human, my human intelligence knows that what was just provided to me is incorrect. And so if I think about the fact that I can ask this thing to pull the stats from a baseball player from 10 years ago, and sometimes it's wrong. Right, that's information where it's either right or wrong, and it's on the internet. It should not, this thing should not be getting that type of information wrong, but it kind of has been as baseline as that. So in my personal life, as I continue to use it, I just kind of extrapolate that fear into the corporate world and knowing that no mistake is acceptable within accounting. It's one thing if you're using it in sales and marketing and there's a typo or maybe there's a dumb word or something like that, or the picture comes off and there's only four fingers when there should be five. Like those are okay things. But in the world of accounting, no mistake is okay. We have we have to be 100% accurate. That's just how it works.
Mm. So is platforms like yours leading the way? How do you see the role of accountants evolving as AI takes on more of the manual rules-based work? Because I think well, I'm based in the Netherlands, and here the most kind of alarming issue that there are no people who wanted to be accountants. So older generation, almost 50, 60 years are gone, and there is no new guys in accounting.
That's yeah. So we have the same challenge in the United States. We talk about this a lot at FloQast, the talent gap that we have. And it's not just the talent gap today, but it's what that's going to look like in 10 years. We have this chart that we share where it's like, hey, if you think you're working a lot of hours today, if you think you're working late today, just get ready for what the next 10 years is going to look like because this talent gap is accelerating at this point. We're going to have less people available to hopefully do more work. I think we can all agree we hope the economy continues to grow. You and I are talking in the middle of a freaking war, a tariff war right now, so we're dealing with some of that. Hopefully that all gets settled out and we're back to growth and we feel good about things. And with that, there'll be more demand for accounting. So at FloQast, we think about how do we plug the gap on that talent side, and it's self-serving, but it's also very accurate. We just need technology to come in and help plug that gap. So for us at FloQast, we want to think about how can we build technology that we can put in the hands of the accountants to empower them to automate their own work. The alternative is building software where you work with IT to help implement the software and start to work on it and go through it. But what we found is that you can give accountants really great technology and empower them to automate their own work. And that's how you get this automation deployed as quickly as possible. I hate to put it this way, but if you don't have to collaborate with IT and you get to control your own destiny, you can roll out software much faster. So we want to put this technology in the hands of accountants. And what we're doing is effectively, if you understand accounting, You kind of have, you know, the debits and credits, you know, the why you're booking any given transaction, you understand the workflows. We want to build a piece of software that's super easy for you to use to automate all the manual work where you're just like, I wish I didn't have to do this anymore. We can help you automate that. And it really is a variety of workflows and a host of workflows that we can help out with. But the idea here is the role of the accountant is going to evolve into looking more like a combination of a CPA with guidance and gap knowledge paired with technology that effectively turns you into a software engineer and empowers you to automate that work. And by having both of those skill sets, that's where you're going to be a really valuable person out in the market. If you know the why behind how accounting works, and then you can use technology to automate that, then you're going to do it properly and really efficiently. And we think that's the future of accounting is that combination of gap knowledge, or IFRS, if you will, Gap IFRS paired with technology to really like automate work and automate work correctly is the big one.
Fantastic. So, Mike, I would like to ask you a personal point of view. What are the major misconceptions in this field of AI and accounting that you kind of strongly disagree with?
I think the one I disagree with is that AI is going to completely automate accounting. I think that, for example, if you're a college student considering majoring in accounting, what you'll read is that accounting is going to be automated by AI. You'll buy into that because you've never actually worked in accounting. Once you set foot in the door of a couple clients or you work in audit or you go to public, you're just going to realize that when you get in the weeds, it's going to be a lot of work before accounting is significantly automated. And the way that work is going to be done is by accountants who understand accounting and compare it with technology. So if you actually think about the future of accounting, and whether you should major in it or not. Right now we have a talent gap. The talent gap is accelerating. If you major in accounting, you're gonna have a fine time getting a job out of college now. That's not going to be a problem. We still have a need for accountants. And then if you're innovative and forward thinking, you're going to be one of the accountants that meet the criteria that I laid out before. You're going to know accounting, debits and credits, understand the why behind it, and then be powered by technology to be a really, really impactful accountant and do a lot of work in an automated fashion. And with that, that's going to be a rare skill set, and you'll be one of the pioneers having that skill set. So I would argue that majoring in accounting right now is actually a very good time to think about that major because you're at this amazing pivot point within the industry at large, and there are going to be jobs available. So I would still major in accounting. All that said, I'm 40. I don't have that decision to make anymore, but I still think it's a good field for people to go into.
No, fantastic. So, looking ahead, what imagine risks do you foresee as AI becomes more embedded in accounting practices, especially with this generative AI entering in, what is it, other risk AI models? What do you think are kind of becoming a trend in the near future?
Yeah, and before I talk about it, I do just want to be clear. I'm a huge believer in AI. I'm a really big fan of it, but then of course I'm scarred by my days in audit, so my brain immediately goes back to, well, what could go wrong with this stuff and thinking about the edge cases where it could go wrong. So the one, if I just had to summarize it, it's work being done improperly by a large language model. And what large language models are really good at is performing work where there isn't necessarily a correct answer. This is an interesting conversation I had with our CTO a little while ago is, it's really good. You can generate images. You can ask it to generate stories. You can do things where there's not necessarily, like, it's great for brainstorming. It's great for chatting. It's great for learning about things, kind of broad subjects. But once you get into the nuances of doing accounting or things that are very specific, like actually performing work, that's where I think there's enough risk around hallucinations to where we need to think really long and hard about how we're adopting it within accounting. So it all comes back to hallucinations. And if you're using large language models to do and perform work, a hallucination is 100% unacceptable. It cannot be introduced into the fold if it is doing work that produces financial statements. If it's doing work that analyzes data, that's a risk the company can take on. They can decide to take on that risk because that's more of a strategic risk and that's more of an operational risk in my mind. So let me give you an example here. We have a piece of one of our agents is able to automate the end-to-end recording of journal entries. Any journal entry, whatever you want to do, we can automate it through our newest platform called Transform. Now, journal entries result in the production of financial statements. So it cannot be wrong. It has to be 100% accurate, or else we're going to fail an audit. Another use case that we have is you're able to use FloQast to analyze the fluctuation within an account. So if your cash balance goes from $1 million this month to $10 million in the next month, we have technology that can go in, look at all the transactions and decide, hey, you had this big, you raised a round of funding, you had $8 million come in the bank. We noticed there was a debit of $8 million to your cash account. As such, that's what caused the fluctuation within this balance. So that's called our flux analysis product. Now, that's one where you're not going to fail an audit if that's done incorrectly. However, if you're a management team and you're relying on AI to produce those answers for you and it does it incorrectly, it presents some risk on the operational side.
Mhm.
Does
So,
that,
yeah,
yeah.
interesting. So, Mike, if I summarize our interview for someone who's listening and would like to walk away with one or two major takeaways, what would that be?
Um, so the audience here is going to be, focused around risks and audits. I would say I'm starting to do some research around how AI is being used within accounting and finance, and really starting to study that difference between what's producing results versus what's analyzing results, and how that should vary our audit and our risk procedures that go along with that. And then just we talked about this earlier, but things change so fast. It is about staying up to speed on the news, following various sources around it. And I would definitely make sure you keep an eye on the big four and announcements that they're making around AI. And I mean, they'll go beyond accounting and audit. They'll be a little broader about it. So I would definitely monitor what the big four are putting out in terms of thought leadership around AI, because they're going to be on the cutting edge of where regulation and risk assessments come into play.
All right, Mike. That's were all my questions. If I forgot to ask you something that is important to our audience, please go ahead.
Um, no, I think you covered off some of the key risk items. Feeling good about everything. Thanks for having me on today, Boris. I appreciate
Yeah,
it.
absolutely. Thank you again, and I hope that we will cooperate with you guys in the future. And welcome to Global Risk Community and Risk Management Show podcast, maybe for another episode in the future.
Yep, that sounds great. And if anyone wants to connect, I'm available on LinkedIn. Feel free to send me a connection request and we can start that.